Hey traders, so welcome back to the Sharks Trading Academy's weekly market analysis. And before we kickstart, look into our website over here and claim your free starter package if you haven't. So click find out more, fill in your details over here, your full name, Telegram ID, email, and leave us a message if you are interested to know more. And I will contact you via Telegram and email to send you the PDF document of our free mentorship package. And for those who have been here for a while, check out this link tree with the description on YouTube, and you will have full access to all of our social media platforms. And with all of this, we will move on to the weekly market analysis. Let's start off with the Aussie yen. So over here, you can identify a daily pin bar. And can I ask you, how is a pin bar formed? So let me just draw for you a pin bar. So over here, we have this with a long wick, right? And for bearish candles, we have the open over here and the close over here. So can you really imagine how is this playing on the lower time frame? We have probably a down move, right? And then we have the open of the candle. Okay, so it starts from here. We have a push up, right? Matching this high of the wick. Then all of a sudden, before the candle closes on the daily time frame, we have a strong sell that closes here. And this is how a pin bar is actually created, right? And this left behind a buy to sell move. So can you already imagine that on the lower time frame, we have a supply zone or maybe some kind of a refined area inside of this pin bar, right? So inside of this on the lower time frame should consist of a supply zone. And let's validate that on the 1 hour time frame, okay? So you can clearly identify this as a supply zone that broke out of structure over here. And prices are now moving into it, right? So as prices moves into this level, you can see that we have a schematic over here. We have the buying climax, the automatic rally, ST, UT, and your UTED over here. So this means that this is the preliminary supply, okay? And to validate this Wyckoff structure, we want to see a breakdown of the automatic rally, right? Which means to say, whatever can happen over here, okay? And as long as we don't see a breakdown of the AR, this Wyckoff is not valid. And if we see a breakdown, then we want to see a pullback into supply zones for us to catch sells into, right? So you can look to validate this via Wyckoff as well, okay? So you can see the shift and participate inside of here to take prices lower. And this is our demand zone, okay? So we may or may not expect this demand to hold depending on what prices gives you, right? We can see some accumulation over here, taps into this area, a breakout, pullback to move higher. And do we expect a breakout over here? Or can we expect prices to come back to potential supply zones inside of here to move down? So all of these are possibilities, and use confirmation by means of the weak hands transfer to validate these zones, okay? So if you go down to the lower time frame, you understand that prices are currently at our POI, right? This 1 hour POI. So if you go down to the lower time frame, you understand that we have another Wyckoff that is a smaller one on the lower time frame. So where do I actually validate this? This is the buying climax, automatic rally, your ST. Okay, this is your UT that liquidates this ST over here. And then we have the UTED. So this UTED, we're going to see a breakdown of the automatic rally. And in this case, we did. Right? So this may be the first breakdown that some of the traders on the 1 minute time frame are able to catch. Okay, so maybe this is the shift. This is the shift, and this is the test. Okay, and as prices comes back towards this level, which it might not, right? So let's say if prices comes back, then we are definitely taking sells here. So I'm actually looking to sell this over here with stop loss above the UTED. Okay, stop loss above UTED. Right? But if you're aggressive enough, like most traders do, they actually just place their stop loss above this zone, expecting it to hold. So the only reason or the only way I will actually place a sell limit over here with stop loss above this level is that if I can validate this on the 1 minute time frame. So if prices comes back up towards here, make this move, right, this shift and the breakdown, then I will actually place a sell maybe inside of here. Okay? And stop loss above this level, because to me this transfer validates this supply zone, and that is why I'll have my stop loss above this level. So it depends on you how you want to manage this trade. Do you want to place a sell limit here, stop loss above the UT, the UTED, or validate this level on the lower time frame and catch this move over here with stop loss above this supply zone. Okay. Aussie dollar will be the next pair that I'll be talking about. And over here, we can identify equal highs, where I expect liquidity to be grabbed. So over here, we have a weekly demand zone. And with this, we are expecting sells into this demand zone, give us an accumulation followed by a shift in structure to push prices higher. Okay, eventually liquidating these areas. Okay, and finally this area over here. So with these buyers in play, we are looking for sells temporarily, right? So drop down to the lower time frame, let's say the 4 hour, okay? And look for areas to sell. So can you see that we have a break of structure over here, leaving behind a supply zone where we can sell from. And with this, we expect movement higher before dropping off. Okay, so prices can actually come back down towards this demand zone since it broke out of structure over here, right? So prices can come back into this demand zone, accumulate, shift before moving into this level, right? Liquidating these highs and these highs, then distribute inside of here, moving down. Okay, so if prices taps into this demand zone, moves off, and respected this supply zone, then we expect this demand zone to not hold, right? We expect this to be broken, and with that we can look for sells into supply zones, maybe inside of here, right? Something like this. Then we look for distribution to push prices lower and continue this bearish order flow into this weekly demand zone. Okay, so with this projection in our mind, we expect prices to come back into this demand level to look for accumulations to move higher. Otherwise, just simply wait for a break of structure over here. So what do I mean by that? So let me remove all of this again. Okay, and if prices wants to break out of structure over here, okay, so let's say we see a breakout now over here. So this leaves behind a demand zone where we are looking to buy from. Okay, and we'll just keep buying into this level until we reach this 4-hour weekly zone, this supply zone, then wait for distributions, right? And with this sell, we are expecting prices to mitigate this demand zone that was left behind, because in this scenario, prices didn't tap into this demand, right? It went off to break out of structure after maybe mitigating areas inside of here. And with this in play, we expect demand zones over here to be mitigated, right? And over here, we can't be sure that if prices wants to hold over this demand, right? If we see an accumulation over here, then we have valid reasons to take buys and maybe towards this supply zone before dropping off. Okay, so this is our buyers for Aussie dollar. Over here, we have Bitcoin, and you can see all of this movement over here, right? We have lows being liquidated, trend lines, equal lows, tapping into this last sell move over here. Okay, so if we're to use Wyckoff over here, we have the selling climax, automatic rally, we have the ST, we have the signs of strength, we have the STMB or spring, right? Over here. So we want to see the clear shift in structure, telling us that prices wants to hit higher, which means that we want to see a breakout of this level. Okay, so prices can do whatever it wants over here, right? And as long as it doesn't break this level, we can't be certain that prices wants to go higher. Okay, at least on the higher time frame. So let's say we have a breakout now. This leaves behind unmitigated areas for us to get involved, to catch buys into this supply zone over here. Okay, so if you're catching buys over here, make sure that you take some profits inside of this 54,000 range, okay, over here. And we'll see what the prices want to do, because we do have a break of structure over here, which prices may want to distribute to lower prices, maybe into here, or an upside move, right? Otherwise, you may see a secondary breakdown to deeper areas to mitigate all of these levels over here before the complete shift. Next up, we have the Euro Pound, and over here, it showed us a very strong movement, right? We have this trend line over here. We have equal lows. We have lows over here, all being liquidated by this strong sell to buy move that broke out of structure. So the intentions over here is pretty clear that prices wants to hit higher. So it may not be from this move, but maybe prices wants to come back deeper to liquidate more positions before moving off, right? So there is no guarantee, once again, Okay, so understand that this is the sell to buy move that broke out of structure, liquidating everything inside of here, right? So we are looking for demand zones here. Okay, jump down to the 1 hour time frame and you understand that we have a demand zone currently over here, right? So can you see that prices taps into this level but haven't showed us any intention of moving higher? Maybe it did over here, right? But we're actually looking for a break of structure inside of here. Okay, so if prices comes back, maybe accumulate over here to give us a break of structure, then we are looking for pullbacks into demand zones to catch this move higher, right? And in this case, prices didn't do that. So we are looking for deeper areas. Okay, so this move up is to mitigate these supply zones inside of here. Okay, and since prices couldn't break this structure, we expect prices to go deeper. And if you go to the 30 minutes time frame, you understand that we can actually define this further, right? We find this this demand zone into this area, and prices taps in perfectly. So how can we get involved now, right? So there are many schematics that we can draw over here. So let's say we have the selling climax, we have the automatic rally, we have the ST, right? So with this, we created equal lows for prices to mitigate into this level now to push prices lower, creating this ST and B, correct? So let me just label it for you. We have the selling climax, we have the automatic rally, we have the ST, we have ST and B potentially over here. And if prices breaks out of this minor structure, then we can expect prices to come back towards this demand zone to buy from. So if you're a lower time frame trader, you can actually buy over here. But for me, I want to validate this structure or this Wyckoff schematic by means of a breakout over here, right? Then look to buy inside of demand zones to move higher. Okay, because with this break of the AR, only then it validates the Wyckoff schematic. But many traders over here, they actually look for the smallest break of structure, which is this minor break of structure, leaving behind demand zones to get involved. So the only way I will get involved inside of here is to validate this demand zone. So if prices break over here, come back down to give us this accumulation on the lower time frame, then I'll actually look to buy here. Okay. Otherwise, wait for the break of structure over here. And another scenario that can play out would be, because this is the STMB, okay, so again, we have the selling climax, we have the automatic rally, we have the ST, then we have supply zones created here where prices taps into, pulls back, breaks down, creating the STMB. So over here, we understand that prices can easily move up, give you a minor break of structure, then move down again, creating what? Creating this spring. Then this creates the real shift that breaks out of structure over here. Then I'm looking for buys, right? Into demand zones over here, whichever, to bring prices higher. And this is how you actually formulate, because you are not sure where is the Wyckoff schematic. Does it start from here? Or can prices actually come back down now to create the selling climax automatic rally, then maybe the selling climax automatic rally, the ST, then STMB, right? So your selling climax may not be here. It may start from here. Then your ST is over here, then your AR is over here, right? So there are just so many ways you can draw this now. So just wait for prices to play out, right? Do not rush into buying over here now. Next up, we have the Euro Yen, and this is pretty straightforward. We have a demand zone over here, right? So prices broke out of structure, leaving behind this demand zone, and we are expecting prices to trade into this level. So you can see this move over here that liquidates trend lines, highs, and highs, right? Before the breakdown, and this breakdown broke out of structure over here. So my bias currently is sell, right? We are selling into potentially this level to accumulate before moving higher. So this is my current bias, and I'm looking for sells inside this area. So let's drop down to the lower time frame and understand where is this move actually coming from. So we have this inside bar on 30 minutes, which can be used as an inside bar for sells. Okay. So this is a supply zone where prices are looking to make a move higher, liquidating all of these levels. Okay, so this is the buying climax, automatic rally. This is your ST, this is your signs of weakness, and we have yet to create a UT, right? So prices may come back to this level of demand. Okay, maybe taps into this supply, comes back down, then move up, liquidating these trend line and highs, creating your UT before the shifts, the first test that some traders can get involved over here, right? So then again, validate this area if you want to, otherwise sell from this supply. Look for the real breakdown of the automatic rally or signs of weakness. Then look for supply zones over here to sell from. Okay, and we are definitely selling into this demand zone over here. So you can actually liquidate some of the positions here, right? Expect some bounce into supply zones before dropping off into this demand zone. Next up, we have the pound yen. So prices are delivering bearish, and this leaves behind a supply zone over here. And you can see that we have this mapped out, right? We want to see a break of structure leaving behind supply zones for us to trade into, right? So it's pretty clear cut. And if you want to catch moves inside of here, then you have to drop down to the lower time frame. So let's just go to the 15 minutes time frame, and you can see what is going on, right? So we have a supply zone over here that is refined, and this is probably the 1 hour refined zone. Okay, so maybe you can refine it further on the 30 minutes as well. Okay, so the main thing is that prices are creating this distribution. So we have the buying climax, automatic rally, we have the ST, and with this we expect prices to mitigate some of these areas or even lower inside of here, right? Giving us the UT over here. UT over here. Yes. Then if we see a shift that breaks out of this AR, then we can look for sells, right? So this is how we can use the lower time frame to actually catch moves into lower areas on the higher time frame, right? So this is how you actually catch a move down towards this demand zone that we are aiming for, right? This is the imbalance that looking to get filled. We may actually take most of our positions inside of here because we understand that this may be a bounce, right? We may see accumulation over here to take us higher into supply zones before distributing into lower prices. So all of these are biases and projection, and these are not valid until it gets validated. Next, we have the New Zealand dollar, and you can see that over here we have a supply zone on the 4 hour and a refined zone over here. So you may be thinking, okay, this may be a validated structure, alright? So let's go down to the 15 minutes time frame. And you can see that as prices taps into this 4 hour supply, it actually gave us a Wyckoff schematic. So this is the buying climax, automatic rally, the ST, the UT, right? The shifts that breaks out of minor structure, the tests of these levels, the breakdown of your automatic rally, right? And this move came back to the last buy to sell positions that may have gotten you a 1:1 or something like that. So let's just use this as an example. All right. So maybe get a 1:1, you get out this trade, right? And with this, prices failed to move lower into our projected area. And instead, it moved upside, right? And in this case, we are looking for a deeper area for prices to mitigate towards. And where it is, so you can see that on the 30 minutes time frame, we have this last buy to sell candle. So notice how we actually refine our 4 hour POI into a very refined 30 minute zone. And for traders who may not know how to manage their trade over here, you may have got caught on the wrong side of the market, right? So you can see that prices mix all of this creation of liquidity to trap retail traders to buy and sell into, right? And all of these are just sideways movement and finally taps into this area. So now if you were to label this, this is the buying climax, automatic rally, your ST, UT, your UTED, right? And your structure is not valid, or this Wyckoff schematic is not valid until it breaks the automatic rally. However, you understand that if prices were to come back and break this AR, then this leaves behind just about 10 pips, right? And we can't really catch anything over here unless prices comes all the way back towards this supply zone for you to sell from. So currently, this is the only setup that we have, right? So if you want to get involved over here at the higher time frames, then look on the lower time frames to get positions. So this is the supply zone, right? And over here, what do we have? We have another valid structure. So we have the buying climax, automatic rally, ST, UT, then the UTED. So you can see that prices or traders who trades Wyckoff, right, may have gotten trapped inside of here. So see this minor break of structure over here. This validates buy to sell moves inside of here. And if you were to sell this with stop loss above this level, you have gotten liquidated, right? And that's why we always wait for the break of the automatic rally. Automatic rally. So buying climax, automatic rally, ST, UT, UTED, the real shifts happens over here. So we break out the AR and we are looking for moves into this area to catch sells, right? And do we aim for immediate lows? We don't, right? We can look for liquidations of this level. So maybe perhaps we put a sell here. We can validate this zone as well, right? By means of a 1 minute Wyckoff. Otherwise, place a sell limit here. Stop loss above your UT. Okay, and aim for this over here. So if prices were to come back, liquidates this area, giving us a break of structure, then you can actually look for sells again to continue this bearish order flow, right? So this is our trade idea for New Zealand dollar. Lastly, we have the USD CHF, and you can identify prices over here, right? We have a break of structure, and this left behind a supply zone over here, where prices taps into perfectly. So it's okay that if you didn't catch this move over here, and with this, we expect prices breaking out this structure, right? Leaving behind supply zones over here on a lower time frame. So let's go to the 30 minutes time frame. You understand that as prices breaks this structure over here, it left behind a supply zone for us to catch sells, right? So if prices comes back up, and we can validate this structure to bring us lower into where? Into this 1 hour demand zone. Okay, so this means that prices can actually accumulate inside of here, give us a shift, a test, and then a move towards where? Towards deeper areas of your supply zone, because we do have some positions over here that aren't mitigated just yet. So you can see that on the 1 hour time frame, we have this 1 hour supply inside of a daily demand zone, right? So this is a supply zone, okay, on the 1 hour time frame. And this means that prices may come back to test this area. So the only way prices can come back to test this area is to sell, to buy, right? So we expect prices to momentarily give us a sell side move, a break of structure over here, right? Tapping into this supply zone to give us a move into this area. And with that, we expect prices to continue this bullish order flow, breaking out of trend line, liquidating highs into this area to shift, right, into this demand zone ultimately. Okay, so this is the first projection. So the second one would be, let's say prices do not move towards this direction, right? We see prices moving towards this supply zone, then move down, liquidating this trend line, this low, tapping into this, then gives us an accumulation and a break of structure, right? Leaving behind demand zones for us to trade into, ultimately liquidating this again, clearing highs along the way into this last supply zone, okay? Before dropping lower, because this demand zone taps into this area, right? You see this move over here taps into this demand zone, but fail to break new highs. Then with this, right, we actually expect prices to run new lows, right? This would be serves as trendline liquidity. So all of these lows created along the way will be liquidated for prices to eventually move towards this weekly demand zone, okay, over here.